Welcome to our third day of Freight Week STL 2026. Thank you to all our sponsors for their incredible support of this annual event. Today, we welcome back Ken Eriksen of Polaris Analytics and Consulting to discuss the forces shaping U.S. agricultural commodity markets and what they mean for barge traffic and multimodal freight along the inland waterways. Drawing on market data and real-world shipper dynamics, Ken will explore export trends, river conditions, infrastructure reliability, and global trade pressures while highlighting how the St. Louis region's exceptional river rail connectivity can be leveraged more fully. Thank you for being here, Ken. To start, please tell us a little bit about yourself.
Thanks, Mary. It's exciting to join you once again. Freight Week St. Louis 2026. Every year is so different from the previous year, and this year is no different. My name is Ken Eriksen, managing member and strategic advisor at Polaris Analytics and Consulting. Now in its third year as an organization where we really work to help organizations and companies thrive at, on, and over the horizon. And we do this by providing comprehensive services that are tailored to the unique needs of each client. And it really starts as a relationship, but it builds on the data that's in the marketplace and in the data of the client. And for a factual outcome that helps guide and support strategic outcomes and decisions for customers who are really trying to get some sort of return on their investment. So here at Polaris, our focus is really helping our clients, customers, and relationships we have anchoring their future. So glad to be here today, Mary.
Okay, so as you look at the current year and near term outlook, what are the most important forces shaping U.S. agricultural commodity markets, and which of those matter most for barge demand on the inland waterways?
Yeah, that's the big question here is we're sitting here in the middle of 2026 and which is really exciting. We're just within a month, Mary, of our 250th anniversary as a country. And there's a lot of policy, there's a lot of issues around geopolitics that are very active in these markets today. And for the United States, the farmers, for the barge market, you really got to have something to move. And U.S. farmers are resilient, unlike anyone else in the world. And this last fall, they harvested a record corn crop that really was a bin buster. And the beauty of that is that it's a supply that then is available not only for domestic consumption and use, whether it's feeding and fueling through ethanol and other such things, but it's also available to the world for feed and fuel for their national economies. And really, food is a matter of national security. And when you look at U.S. corn, the exports are record large for the current marketing year that we're in. And quite frankly, as we're going through the planting season at the end of this month, we're going to get a picture of what farmers did plant. And they started fast. The weather was conducive. Now, they were waiting for some rain to get there, but it's been very important. And there's been a lot of policy that have enhanced the need for soybeans as well, for soybean oil, as we're using it as part of our fuel, whether it's in renewable diesel, especially in different parts of the United States. At the same time, when you look at some of our buyers and our friendly buyers, our neighbors in Mexico is an important buyer across the border, and they are our largest buyer. They continue to buy more corn in the last few years at every year at a record pace. Now, much of that will move cross-border by rail into Mexico, but there's still a sizable volume that moves down the Mississippi River system and moves by barge. But the beauty is that you have still access to the global market. Now, China has been tethering back a little bit on how much they're buying from the United States here and some of their commitments, but they're still important in the long run. And they've been looking at other buyers around the world. They've also, however, had some changes domestically on some of their consumption patterns. But as we're seeing some adjustments to their economy, and despite falling population counts, you still have this burgeoning middle class, and that middle class moves into higher consumption of better value commodities, such as higher value proteins like meat products. Still a very large pork consuming environment economy, but they're also buying more beef and eating that as they move into that area. Now, these policies that we're seeing that are very important for navigation and low water, very important for us. There's a lot of work to expedite and make for better transits on the river system here, especially from St. Louis down to Cairo, Illinois, where the Ohio River drains into the Mississippi River, and then all the way down to Baton Rouge, where you connect with the Mississippi River Ship Channel. And all of that is very impactful, especially the Missouri River system and how it impacts. Mary, I think you're the one who coined it, and I've worked to champion it with you. Ag Coast of America, and it's really important here. There's a snowpack issue on the Ohio River, Missouri River basin, that we really didn't get a very strong snowpack. And right now, the water levels through St. Louis are adequate. They're above average, and they're holding in there. But my concern is looking at in the fall, when we get into late fall, early winter, how much water will be available from a very drawn down snowpack on the Missouri River basin. That's something that we got to watch. In the meantime, we look at what's going on with crop planting. We're getting off to a fast start. A little bit less corn, a bit more soybeans, as we've seen some price adjustments here in the United States, especially with that big crop last year. But suffice it to say, we see a very good environment here for U.S. grain exports, but at the same time, those needs of fertilizer to come back into the country. Now, we've had this little disruption. Some are calling it a war with Iran, but that's also led to disruptions with the Strait of Hormuz. And we do receive a lot of fertilizer from that area of the world. And some of that is now kind of constrained by that restriction to get to the United States. Now, a lot of that fertilizer came into the United States already. And quite frankly, we're still buying a lot of fertilizer from Russia, and we're bringing it in through a lot of it through the U.S. Gulf. Much of that then gets loaded on a barge and moves right up into the St. Louis area. So if we think about, marking our 250th anniversary this year, there is a sense of renewed national focus on our agricultural roots, our rural strength. And look, some of the recent rains that we've had is helping these river gauges. Going to be watching what goes on with the snowpack. And this matters for the efficient movement of commodities and inputs like the fertilizer that are impacted by the volatility in the energy markets. But there's also such things as with the salt and the other commodities that move up the river system here. So shifts such as the Hormuz, even with OPEC and OPEC Plus, that we're starting to see some breakup there as the United Arab Emirates pulled out in May and we're going to go on their own. And they're a sizable supplier of energy to the market. So a lot of interesting dynamics that we're seeing in this environment today.
St. Louis sits at the convergence of the Mississippi, Missouri, and Illinois rivers. From your perspective, how does that geographic position translate into a competitive advantage for agricultural freight? And can you share any examples that would indicate where the region is still leaving value on the table?
And look, St. Louis, again, as the ag coast of America, has a symbiotic relationship with that Mississippi River Ship Channel. And by symbiotic, it's being characterized by or being a close cooperative or interdependent relationship with that stretch of the river, because there's this high relationship between the commodities loaded out of St. Louis and what moves through that Mississippi River Ship Channel, which, by the way, combined is the largest volume of commodities and diversity of commodities moving in the United States. And it connects so well with the St. Louis region, and not only moving from St. Louis, but what's moving up to the St. Louis area gets to be important. And so as we do approach our 250th anniversary here in July, investing in this system is how we honor our America's agricultural heritage and build prosperity for the next 250 years. And really tying that to St. Louis and that ag coast of America. But there's a lot of assets in that St. Louis area, certainly with the number of facilities that are directly on the river, but are also served by the Terminal Railroad Association of St. Louis. And all those 6 Class 1 railroads, as we know it today, connect. And there's a vital connection with them to serve them to expand the reach of St. Louis and to expand the reach of the United States to come into St. Louis and access the river, but also for the river to access the nation's economy through those railroads and really reach out. So that's an important aspect there. But then the areas of underutilization, look, are we using it as extensively as we can? Is there enough investment? And I think as we start looking at what is really available, there is still capacity available to access the river. And there's more opportunity as I think about the investment in agriculture for soybean crush facilities. We're using a lot of the soybeans for crush for soybean oil that really goes into our fuel tank. At the same time, you just have this inevitable flow of soybean meal that's going to need to find a place in the world to go. And St. Louis offers a great opportunity to serve that through the river network and really go down to that Mississippi River ship channel. Meantime, we need a lot of fertilizer that comes up the river. And quite frankly, when we think about what has transpired geopolitically, there's probably even more importance for us to look at where do we source our fertilizer? How do we receive it? And not only that, the salt and the sugar and all the other types of moves that move upstream. And we've seen some good weather the last few years during the winter that necessitated more salt. And rule number one, if you're a public works office, is grandma does not go in the ditch during the winter. Salt is an important component to that, and we want to make sure that we keep everyone safe. But it's always looking at what needs to come. But there's also this area of investment in America that we're seeing with so much on data centers and the energy to support those, that we are seeing a lot of demand for barges for those riprap, the rock and sand and gravel that is going into the construction of these facilities. So, having that important messaging to bring the various forces together as one alliance and focused on this Mississippi River is more viable today as a multimodal option, and really need to be looking at the efficiencies that the river system brings, the lowest fuel emissions per ton, the lowest cost per ton, and be able to move high volumes at one time. And so we think about what's transpiring here. It's important because that this connectivity does position St. Louis perfectly in supporting the America's infrastructure renaissance. And that is not going to slow down anytime soon. And quite frankly, we're seeing even more interest coming into the United States with more manufacturing and providing more nearshoring or reshoring back here. Like the work that goes on with other associations such as yourself, Mary, and the St. Louis area, the Waterways Council Incorporated, America's waterways operators, and many of the state associations are important as you come in a unified way and bringing similar messages to support that infrastructure development. There's a lot of opportunity, but we got to be careful we don't leave anything on the table or off the river, for that matter.
Okay. Infrastructure reliability remains a key concern for ag shippers and barge operators, given how infrastructure constraints ripple through freight rates and export competitiveness. Where are infrastructure constraints having the greatest impact on commodity flows today, and where would targeted investment deliver the biggest return?
We think about those ripples of constraints or some sort of impact. And if there's some sort of restriction to navigation, let's say, now all of a sudden you can't move as much volume with the same number of barges, for example, and you just can't levitate or create barges out of thin air. And so what happens is you constrain it, the demand goes up, and now freight rates go up. Freight rates go up, and now that cost has got to be passed on somewheres. And then for agriculture, it really works backwards upstream to the farm gate in a week into price, because the signal is, look, don't send as much. We don't have the capability right now to move that much volume. So the farmer actually sees a lower price at the farm gate, and they actually lose money on that. Or if they ship it, they're actually the ones paying for the impediment along the process here. And if that continues long enough, that just incentivizes infrastructure development and investment elsewhere in the United States and especially around the world. And we have seen that as we've seen that. But at the end of the day, this is a relationship business. And we're seeing it during the low water events of the last 4 or 5 years that, after 2022, the industry really came together, working together with the Army Corps of Engineers, the U.S. Coast Guard, but also together with the barge companies and the shippers to say, hey, what do we need to do to communicate better? And they really started working together in person and trying to work through challenges there to be more forward looking and to be looking over the horizon. Okay, here's what we know it's at the horizon today. What are we expecting? And then how do we get over that? And they really have done a lot. Even during some of the lowest water years, we still continue to move volumes, but we're doing it by making some adjustments. So we've learned a lot by talking to one another, addressing some challenges, and making it easier for cargo to flow and barges to be available at the same time. Now, infrastructure of people is another big challenge. And there's a great number of groups out there supporting more activity for people to come to the waterway system. Yes, we've seen some layoffs in certain sectors and industries, but there's also still great opportunities for people to work in the waterways industries at the same time. And a great number of groups are doing some work around that. Our political infrastructure, funding is very important, of course, but the timeliness of funding and the prioritization of that funding and different groups like the Waterways Council, together with yourselves and others, have really put forward an initiative to say we can do better. We have learned a lot, and we need to invest in our physical infrastructure, and we need to continue to do that because right now there's a great renaissance of investment in the United States, and if our infrastructure can't keep up with that, and quite frankly, Mary, there are a number of companies that are wanting to invest in the United States, and they just can't build all the components and the modules here in the United States. Rather, they're going to try to do it from around the world and bring it up the Mississippi River system. So, be able to have access to this river system is important, not only for the physical commodities that people use to feed and fuel and have the fiber for themselves, but also for our own investment of infrastructure and our industrial base in the United States here. So, how do we allocate these scarce resources among competing goods? That's a definition of economics, and is now having those signals out there and showing that we can be doing something here. So there is resources out there. We've been seeing some announcements here in the last few months about the port investment programs from the Maritime Administration. There is money available to make these investments. The question is, how are we working beyond just our own little isolated area, but in a corridor of sorts, working together to look at the good of the entire system? And look, St. Louis is the envy of so many places because you've got the volume of commodities that want to hit the river or come into the area and go into the economy. You've got the natural berths and terminals there, more opportunities. There's some investments taking place there. And so this gets to be important to be able to use the PID programs and other such grant available things to strengthen our physical infrastructure and our people workforce. That gets to be important at the end of the day. And then that political will sort of has to follow along because they're seeing things getting done. So that reliable navigation on this Mississippi River just isn't great for freight rates and exports. It's foundational to our nation's future and really our competitiveness and our self-reliance. We see this renaissance of building our economy in the United States through manufacturing.
Global competition, geopolitics, tariffs, and shifting trade relationships continue to reshape export flows. How are these dynamics affecting U.S. agricultural competitiveness in 2026? And what does that mean for barge utilization on the river system?
Mary, it's a loaded question because every day you wake up, there seems to be another announcement or another activity in the world. Look, China, Venezuela, Russia invading Ukraine in 2022, and they're still at it today. October 2023, Iran and Hamas invaded Israel, and what that did to the Red Sea, that changed the supply chains in an incredible way. And then with what at Venezuela again, what we're looking at to try to call into account, I guess. But then with the Strait of Hormuz, whatever becomes of that, and as things try to get reestablished there in some form, there's a lot of challenges there. You know, I look at the United States, and in some ways, this drill baby drill mantra was quite fascinating. And I've been saying for a while, sometimes that baby's going to, at some point, it's going to grow up and it's going to mature, and you're not going to be drilling as much. But well, here we are with challenges in Venezuela and Iran, changes in the OPEC countries. The United States still has a great supply of oil at the ready. And to be able to keep drilling is still an important part. But even those that have been drilled and are ready to be used, that can come into the economy. And that gives the United States at least some semblance of balance there and opportunity here. Now, when we think about this ag coast, it gets to be important because you've got so many markets you can access through the Mississippi River Ship Channel. You've got dozens of countries to go with agricultural commodities and products. Whereas in the Pacific Northwest, they're really limited to about a handful of countries. Now, they serve a very important role. And quite frankly, we have seen the railroads try to move grain and commodities out of the middle of the country to go to the PNW because they've got some opportunities that open up for them as they're not moving as much coal. End of the day, we are seeing coal is still an important feature, and the waterway still offers a great amount of opportunity to that. So even with things going on with Iran, some of the tensions there in Venezuela, the impacts on energy and fertilizer, what we're seeing with the OPEC countries and the changes, these are evolving relationships. Look, His Majesty and Her Majesty came and visited the United States last month and really was received well and was very positive impact. And to reestablish that relationship we have with our key ally, with the United Kingdom, is so important. Could be that could that be the mechanism and the energy to really spur us on in our relationships around the world here? And for the inland waterways to be able to keep U.S. agricultural competitive, that's at the end of the day, the envy of the world is that we've got this incredible funnel to move commodities into the world through St. Louis down to the Mississippi River Ship Channel, out of the Gulf of America and into the world. So very exciting what we see taking place here, and these alliances that are taking place here, these geopolitics do offer opportunities to establish ourselves. Maybe it's more bilateral, not multilateral, but it starts to build some strength back into what we do and do well and really supporting our commodity waterways.
For Midwest shippers, carriers, and terminals planning capacity and investment decisions, what indicators should they be watching most closely over the next 12 to 24 months?
I like this question for a couple of reasons. One, as part of Polaris, able to write a Horizons column for the Waterways Journal, High Plains Journal, and the Great Lakes Seaway Review, all owned together. And as part of that, I continue to survey barge operators. And I think a very important data point is watching what is going on with the inland barge fleet. It is at a point where it's an inflection situation. We've got a lot of older barges in the fleet. They're now getting long in the tooth. The question is, how well were they built in the most recent phase in the mid 1990s compared to the 1970s? What type of steel, what type of coatings, how they've been maintained? And at some point, they just get old, and there's a certain amount of oxidization. You lose about a ton of steel off a barge every year. So the barges just age. And so we look at this, I think there's some concerns around that there's going to be some retirements, maybe retirement cliff in the next 2 years, if not right ahead of us here. And then is there the need to replace those barges? And then lastly, do we resurge or rebuild that fleet as we go forward or expand the fleet for what we could see, maybe this renaissance that could be taking place to the river system here? Other things I like to watch is what's going on, not only just in the stock market and GDP, but what's moving across all of transportation. So the Bureau of Transportation Statistics shows what's moving by pipelines, airlines, air cargo, railroads, waterways, trucking companies, etc. We peaked in our volumes in 2019. Now, a lot of that was because we're seeing our coal production fall by half, from 1.2 billion tons in 2008 to less than a half billion tons today. And that's a big driver of lower commodities moving on the river system or any transportation system. But at the same time, we're not seeing growth in the intermodal moves. Those have sort of plateaued. We get spikes. And so is the consumer changing things, the way that they buy things, and understanding that dynamic and the purchasing power they have today? What is transpiring with the amount of investment in transportation? Now, we have seen the transportation stocks for the publicly traded transportation companies rebound really nicely from January this year. What's the momentum behind that? And now you get to a point where people think about mergers and acquisitions. And we have seen that whether it's in airlines or in railroads, that's right in front of us, or even with the waterways industry, we're seeing things. So these trends and what contributes to the gross domestic product are important. And what's going on with the purchasing power around the world is people we see, especially not just in China, but those other countries where manufacturing moved into South China, Southeast China, they're doing a lot of expansion. And they're going to be sending a lot of goods to the United States. And we're going to be doing a lot of business because we're also sending them a lot of agricultural commodities. So the rail merger is important for us. And there's a lot of underserved communities out there and industries. And look, there's this great watershed 250 miles away from the river, as it's been called, that could provide opportunities for the river. It could also take away volume from the river if we think about the railroad that could be merged, the UP&S, as they may be able to just move over there, the river system as a united railroad. They could actually compete with the river at the same time, bring volumes to the river or away from the river. So something to watch how that transpires and what becomes of the regulators as they look at that. So there is the opportunity that maybe it reduces some congestion, gets more efficiencies in the system there. But these activities are important because we've got a maritime renaissance in front of us. The Ships Act that goes back to the Biden administration and the House and Senate, and some very bipartisan support. You've got the President of the United States now has probably said maritime more than any other president combined, thinking about investing in America. And we've got this maritime action plan that gives somewhat of a blueprint of what we need to do go forward. Now, the proof's in the pudding. Where's the investment? Where's the money that's going to come from that? And that's going to be the important thing. And inland waterways factors hugely, if that's a word, into that environment here as part of our maritime plan. So, beyond these transport stocks and the intermodal moves and GDP trends, and the rail developments, we're going to want to watch how America's 250th initiatives highlight agriculture and infrastructure. The national celebration can drive momentum for investment, and that enhances river rail connectivity. It aggregates demand for growth projects and overall multimodal capacity and connectivity. At the end of the day, positioning St. Louis and the ag coast of America and the full Mississippi River system for the next quarter millennium and for the generations to come. Mary, I think the best is still ahead of us, but we got to be careful we don't leave money on the table or off the river as we look at the opportunity to really invest in America. What you're doing in St. Louis, the announcements of Boeing reinvesting there, strengthening itself, I think there's just yet better opportunities as we go forward in the future.
Okay, Ken, thank you again for joining us today. This was a helpful exploration of some of the forces shaping U.S. ag markets and export trends and the role river conditions, infrastructure reliability, and global trade pressures are playing in today's ever-changing environment. We always appreciate your ability to leverage real-time market data and real-world shipper dynamics to paint a vivid picture of shifts in barge traffic and multimodal freight movements along the inland waterways while highlighting opportunities for the St. Louis region's exceptional river rail connectivity to be leveraged more fully. Special thanks to our sponsors. Their support makes it possible for us to continue to deliver the great content that is a hallmark of this annual conference. Presenting sponsors include Ameren, the Illinois Railroad Association, and GFT Infrastructure. Supporting sponsors include HNTB, Steadfast City, and the Hauser Group.